Today I'm talking about Palantir, which is a popular stock among retail investors, and recently it has been crashing. And number one reason why I decided to look at Palantir and give my opinion is because Cathie Wood sold a big chunk of Palantir, which automatically says if she's selling, I should consider buying. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a website dedicated to microcap stocks which are ignored and underfollowed by the investment industry. I also wrote 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created Value Investing University, which is a free resource for you to become a better investor. Palantir is a stock that is very much well known to many retail investors. Actually, a big portion of the company's float is owned by retail investors, and many YouTubers have been talking about the company. And recently, Cathie Wood, which liked Palantir, sold a big portion of her holdings. And I figured, she only gets involved in buying at the tops and selling at the bottoms. So I figured it would be a good time for me to take a look at it and to see if it's something that we should consider. So just in summary, Palantir is a software technology company which services governments and commercial clients. It is a data analytics company and counterterrorism technology company that many governments use it, and now many commercial companies are signing up for. It's a good business. I'm actually surprised that Cathie Wood had it in her portfolio. I'm surprised that she actually chose a good company. I thought that she specialized in disruption and trash, and I was pleasantly surprised when I looked at the quality of this company that she actually had an interest in it. But now that she sold a big chunk of position, it made me realize, yeah, she does focus on overhyped and overpriced securities. If you look at the company's gross margins, they're absolutely fantastic, almost 70%. Now that's quality revenue. That is quality revenue. So it has high quality revenue. It has fantastic clients because governmental agencies are fantastic clients. Even whether they're government agencies or commercial clients, the technology or the software that these clients are buying, they're sticky. It's hard to switch. So this is a very, very high quality company, and it is growing. At the peak, when the stock was 3 times higher than what it is today, investors were paying about $66 billion for the company. And based on the revenues approaching now $2 billion, they were paying a pretty steep price, over 30 times revenues. And now with the sell-off, and the stock came down from about $35 per share to, let's just say, about 10 right now. The market cap is about 20 billion, and investors are paying only 13 times revenues. And I can't believe I'm saying only, I'm making it sound like it's cheap. Well, it is reasonable, okay? It is reasonable. I can see why people think it's undervalued, and I'm not disagreeing with this at all. You see, at the current level, even though the company is not profitable on a net income basis, it is growing very fast. And it's clear that the company is sacrificing the current profitability in order to grow. And it is expected that the company will grow for about 30% per year for the next 3 to 5 years. So if we take this as for our calculation, so let's say $1.7 billion in revenues, and we take this for the next 3 years. 0.3 times 1.3 times 1.3. So in about 3 years, it should generate about $3.7 million of revenues. Okay, so now if we compare this to the current market cap, it's pretty reasonable. And now if we take it for another 2 years, let's say for another 2 years, it grows only at 20%. So it would generate revenues of about $5.4 billion, okay? So 5.4, so 22, what it is today, divided by 5.4, it is trading at 4 times future revenues. Now, if you are a long-term investor, like truly a long-term investor that buy a position and you hold it for years, you're gonna make money, because by the time the revenues are, let's say 5.5 billion, okay? A company with this kind of quality revenues, if it trades, I mean, I could see NASDAQ investors, now they're always drunk when it comes to growth. They're always drunk when it comes to these kinds of companies. Yeah, I mean, I wouldn't be surprised if they put a multiple of 20 on those revenues. I would have no problem with this. So then the company would have a market cap of $110 billion. You divide it by 110 divided by 22 today, you're looking at 5x over this many years. Yes, of course it could grow a little bit slower, so you can do the same calculation when it grows a little bit slower. So I can see why people would be excited about it, and I'm not going to disagree with it at all. Now, the reason why the stock is selling off right now, or one of the reasons why the stock is selling off right now, well, because everything in the tech sector is selling off. That's number one. Everybody is freaked out about interest rates. Everybody is freaked out about maybe some kind of war is going to break out. Everybody's freaked out about being freaked out, right? So they're selling good and bad companies. Obviously, the news that Cathie Wood sold out and so many retailers are holding this stock, that doesn't help at all. And apparently, she sold out because the government division is slowing down. That was, like I heard, one of the reasons. And that's absolutely true. If you look at the growth for the government division from quarter versus another quarter, the same quarter from the prior year, the government division during the first quarter of last year grew 76%. Then it grew from the second quarter, it grew 66%. And the third quarter, it grew 34%. And the fourth quarter, it grew only 24%. So it's a clear deceleration, right? 76, 66, 34, and 26. So it's a clear deceleration in the government sector. But now, how should this be as a surprise to her is beyond me, because it's clearly known to the market that the government division is pretty much kind of maxed out already, and that's why they're focusing on the other division, which is the commercial division. And during the same period, the commercial division the growth is accelerating. In Q1, it was about 20%. In Q2, it was 28%. In Q3, it was 37.5%. And in Q4, it was 47%. So you have, one division decelerating, and I didn't say like it's going down, it's decelerating. Well, actually, there was a decrease from one quarter to another in the government section, like, sequential. But overall, the governmental section is still growing, but it's growing slower. So you have it, the growth is decelerating, while the other division, the growth is accelerating. But overall, the company's revenues are still expected to grow at a very good rate. And obviously the multiple of 13 over those revenues, those high quality revenues, I would say it's reasonable. It doesn't scream like cheap to me, because I'm cheap, but it's reasonable, and I can see why people think it's cheap and why people are actually buying the dip at this level. Now, even though I think the stock is priced reasonably, even though I think that if you buy the stock today and you truly hold it for 5 years and the growth that is expected materializes, you're going to make money. You're not going to lose money. But absolutely in the short term, you can lose money, because you can buy it today for $10. Yeah, it can go to 5. It can go to 3. Nothing can stop it from going there, because who is to say that Palantir cannot trade for 5 times revenues or 3 times revenues? Like when companies are not profitable yet and the fear is very big, it can trade at any price it wants to, because I'll tell you what, value investors are not going to come to bail it out, because value investors, a lot of times, they want free cash flow. They want net income. They're not the ones that are going to come to the rescue. As a result, in the short term, yeah, it can go lower. Anything in the short term really can go lower. But I always think about, like, can the value investors come in and save the day? I don't think many would do it at this level. So is this something that I personally would be buying, Palantir? Well, even though I think it's reasonable, no, I wouldn't be buying it myself, but that could of course be different for you, because the kind of opportunities that I have, let's say Voxter, for example, right? And if you haven't looked at my videos on Voxter, go to my playlist, look at Voxter, and you tell me, because I have a certain amount of capital, okay? We all have a certain amount of capital, and we're trying to put our capital to work in the best places possible, okay? So you tell me, Palantir or Voxter? Like, if you know Voxter, like, it's a no-brainer. Like, you're gonna go with Voxter, and I'm going with Voxter. Why am I going with Voxter? So if I compare it to Palantir, Palantir is trading at 13 times revenues. And those revenues are good. Yeah, good revenues, good quality company, I like it. But I'm paying 13 times revenues. And I'm growing, or I'm hoping that the company can grow those revenues at 30% a year. Voxter is trading for about 3 times the current revenue run rate. 3 times, not 13 times, not 30 times, 3 times. How much are Voxter's revenue expected to grow? Well, the CEO just came out during an interview with James West, the Midas letter, and said that we're going to grow revenues at 3 digits, like more than 100%. So let's just say 100%. So I'm paying 3 times for the current run rate, and they're going to grow about 100%. And that's just 2022. And then the growth is going to go exponential. Like, they're going to grow another 100% or 3 digits the following year, and they have this huge growth over the next 5 years that can, 10x or 20x revenues. And I'm paying 3 times for it. And I am probably paying 2 times, or maybe 1 times, or maybe below 1 times 2022 revenues. So for me, it's a no-brainer. Like, yeah, I can talk about Palantir, I can make a video about it, but there's no way I'm ever going to put my money into it when I have something like Voxter. Now, I have another company that I'm not investing, but I'm considering, and it's part of Microcap Explosions. Again, I think Voxter is better, but that other company has gross profit margins of about 57%, 5-7, a little bit less than Palantir, okay? But it's trading for less than 1 times revenues. And those revenues are expected to double over the next 5 years. And the company is profitable. And it's trading for 8 times earnings. So double revenues in 5 years, probably the net income is going to double at least. So the PE is going to be, 4 based on the current valuation. And it's already trading for less than 1 times revenues. So by the time it's going to be trading like 25% of revenues if the stock price doesn't move. By the time I would be interested in Palantir, I would have 10 investments ahead of it, because I'm willing to go into places where other people don't want to go. I'm willing to go into the small cap space or micro cap space and get those opportunities. Like, Palantir doesn't even compete. But if I had, billions of dollars under management, then yeah, I would have to buy something like Palantir, but I don't have billions of dollars. I'm working with smaller amounts of money. So yeah, I can talk about Palantir. I can see why big hedge funds want to buy it. Retailers, it's beyond me why they would want to buy it, since they don't have a lot of money, but they're buying it for a different reason, because they want to feel comfortable, they want to invest together with a favorite YouTuber, and they don't even understand that there is a universe out there of companies that are much better quality or similar quality, because Palantir is a fantastic company. But you're paying 13 times revenues for it, and at the peak you were paying 40 times revenues or whatever, I can't even remember. You can get those same quality revenues, those same quality companies for much cheaper, and as a result, your margin of safety is greater, and you're still getting the same upside that you get with with a company like Palantir. So anyway, that's it for this video. In summary, I do like Palantir. I do like the business. I do like the fact that Cathie Wood is selling. That alone tells me it's probably going to turn out very well. If you are a long-term shareholder, truly a long-term shareholder, not just talking, you're a long-term shareholder, it's going to work out very well for you if you truly hold it for 5 years and the growth materializes. So yeah, for me, it's just simply I have better investment opportunities, but nothing against Palantir. I like the company, think the valuation is reasonable. So that's it. Thanks for watching.